Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, also known as Matt, the mortgage guy. How you doing, buddy?
I'm doing great, Mike. How you doing?
This has been a conversation that's probably been a long time coming. You and I actually first talked about this probably 3 or 4 months ago that, hey, the refi business we said was going to go down 75%. It's now down 82%. So we were low. Purchase demand is down. I've been talking about housing transactions crashing, which means mortgage demand for purchase is down. And we both said what's going to happen behind that as seconds and home equity lines. So I'm guessing more and more people are bringing home equity lines and seconds to the table. But you're in the business. What are you seeing?
Yeah, for sure. It's, traditionally it had been, big banks, credit unions, people would have to go to these type of institutions for home equity lines of credit. Over the last month, I think I've seen Guaranteed Rate, Rocket, a bunch of folks roll out home equity line products. I probably shouldn't miss an opportunity to sling some more mud at Rocket because I really do not appreciate them going after and strategically trying to refinance people out of great mortgages for their own gain. But I talk to folks that work within prepay data analytics, so they can see the loan type, the lender, the credit score, all the things. And Rocket Mortgages prepay on mortgages, meaning they're refinancing somebody who is quote unquote out of the money, 200, 250, 300 basis points. So it's 2 or 3% worse than the mortgage they're in. There's nobody who's even close in second place. So Rocket Mortgage takes advantage of people. There's no two ways about it. Finally, in last Thursday's prepay report, cash out speeds are slowing down because cash out speeds were going up, and it was almost all attributed to Rocket Mortgage. The credit scores were getting lower and lower. They were running out of 640, 660 to refinance. So then they went after 620 and 600 and said, hey, listen, you've got all this equity. I know you've got credit card debt. I know you're not responsible with your credit. Come get it. So rant over. They're just the bad guy, in my opinion. With that being said, cash out refinance for the vast majority of people does not make sense. A lot of mortgage folks like me who do a lot of loans, who was doing 30, 40 refinances a month in 20 and 21 is doing next to this number, zero.
Because it doesn't make financial sense.
Right. 95 to 100% purchase business right now in 2022. And what does make sense for a lot of people is maybe you owe 600 at 2.5%, but you want to get an $80,000 home equity line of credit for a number of different things, right? It could be remodel, it could be pay off high interest debt, it could be whatever. That makes sense. Touching that first 600 grand at 2.5 does not make sense. And so United Wholesale Mortgage this morning on their sales call said it's coming within the next couple of weeks. And so the good news for consumers is you're going to have a lot of options. You can use the bank that you've banked with for 32 years. You can use the local credit union where you like and trust them and hold your accounts there. You can use a broker like me, and we can broker it to United Wholesale Mortgage. But those options will be out there because, and I warn people against this, people have record equity. There's a lot of good ways to use equity to build wealth. And like the analogy where, the same gun that protects you also can kill you. You don't want to go out and just say, you know what, I've got equity. This reminds me, Mike, I've got to send you this voicemail. I've got a voicemail. It actually came to my wife's phone. Who knows, property data is public. Somebody got her number, and it's one of these, blasts for refinance. This voicemail, I can't remember the exact pitch, but something along the lines of, hey, if you've got a lot of equity, the banks are making billions off of you. That equity is being used by the banks, and you're dumb. You've got to pull it out. It was one of the most ludicrous things I've ever heard. And it borderlined on like, is this guy a genius or is he an idiot? Because that might resonate with people. People might go out there and because of it.
Let's just say it. I think a lot of people get that message and just assume it's correct.
Right. Oh, that's what the bank is doing.
Oh, I gotta go get mine.
150,000 equity. They're using that and they're making billions off of me. That's why they're successful. I'm gonna go pull out my equity.
Yeah, I'll
$800
show them
more per month. I'll show them.
them.
Right. Yeah. So don't. Oh man,
That's not how it works,
marketing
folks.
is a funny animal. But home equity lines of credit are coming to market. There's something that the consumers want, need, and have asked for, and it's going to be widespread. I've pinged a few of my buddies who are in the banking world to figure out what's out there for investment property home equity line of credit, because I know that me and you both talk to a lot of investors, around a lot of investors. Know that if you're going to get a home equity line of credit on investment property, you're going to be capped at like 55 or 65% loan to value. And while we're talking about mortgage products, while some of this stuff is coming out, lenders aren't being super aggressive right now. I don't know if anyone's noticed, but the market's changing. It can be scary. If you're on the side who's holding the bag of all the money, you're probably wanting to tighten up a little bit. I had somebody call me yesterday, Mike, and they were looking for a 5% down jumbo. And I went to my pricer and I priced it. And I literally closed a 5% down jumbo 4 weeks ago. And we had 3.5% down jumbo, 5% jumbo, and not just one investor, a couple investors. It's all gone.
Oh, wow.
10% down jumbo is pretty much the lowest down payment you could find. Jumbo investors just backed out and said, you know what? No, thanks. And that happened kind of quietly, to be honest, because I didn't hear about it until I went to go
price it. Yeah.
Price it and search this product for somebody. And then I said, you know what? 10% down is our only option here. So there's going to be products that roll out that we know the market needs, but they're not going to be aggressive, loose guideline, wild products. And then some products that some people might take for granted, just because it's here today doesn't mean it's going to be there tomorrow.
Yeah. Well, there's a couple of things, right? If people watch my channel, you know that I'm not really keen on home equity lines. I think they get people in trouble because they don't use it wisely. If you're going to be interested in taking home equity on your home or on your investment property, please work with a professional who's going to ask the harder questions. And that is Matt, the mortgage guy. That's why he's part of the channel. How do you want them to reach out?
Go to greatmortgagebroker.com. And here's my little pitch on that, Mike, because I agree. I think that most like credit unions and banks aren't going to necessarily try to talk somebody or be a hard sale on that. But with these products in the broker channel, I had a funny conversation with somebody yesterday. Why would a company like Rocket refinance someone in that $700,000 loan versus doing the home equity line of credit? Well, a $700,000 loan, if you make 1% or 2%,
they make a lot more money.
$7,000 to $14,000. These home equity lines, Matt Ishbia said it in a sales meeting this morning. The companies aren't going to make any money. Broker like me, not going to make any money. A couple $100. I might make a flat fee of $200, $300 on a home equity line of credit. So $200 or $300 versus thousands. Yeah. But knowing that, if you talk to a broker, I'm not going to hard sell somebody to make $199, right?
No,
but I'm going to look at it and say, hey, listen, if you're going to do this, yeah, it makes sense. Let's do this, right? And we'll have processes in place to make it smooth and easy. But it's not going to be something where it's like, oh, here's this new product for the financial advisor where he's going to make a 5% commission on, whatever policy he's selling you. It's just not the case. So it's an option that's for sure going to be a lot better for some people than cash out, especially if it's needed for whatever reason.
Yeah. Again, if you know my story, recycling capital is a big deal. I've used it. I was very careful. My natural bias is most people aren't as careful. But if you're going to work with a professional who will ask you the hard questions, because again, he's like, do I really want to do this for $200? It's only if it works for the client, which is why I appreciate Matt, the mortgage guy. How do you want them to reach out?
Go to greatmortgagebroker.com, fill out the form, and we'll be in touch.
Awesome, buddy. I appreciate you. Thanks again.
Thanks, Mike.